Is property too expensive in Singapore? So why don't you buy REITs? A REIT stands for Real Estate Investment Trust, where you can invest your money with a pool of other people and then use that money to buy income-producing properties like hotels, retail malls, offices, etc. So why would you invest in a REIT over like a physical property by yourself? So I think the main reason is because of taxes and the hassle of managing your own property. Now, there's nothing wrong with buying an investment property, but when you buy a property and you rent it out, there's a tax on your rental income, and you also pay a higher property tax as a landlord. And that is not easy to always find a tenant, and sometimes you might get a good tenant, but sometimes you might get a tenant from hell. On the other hand, REITs are legally required to pay 90% of their income back to unit holders, and you receive those distributions tax-free. As a REIT owner, you don't have to deal with tenants or property management. All of that is taken care of by the property manager. And finally, REITs are liquid and easy to trade, just like a stock. So unlike a physical property, which take you months or maybe a year to sell, REITs have no issue. Well, this is not to say that REITs don't come with risk. So because they're traded like a stock on a stock exchange, their prices can fluctuate on a daily basis, and REIT prices are very sensitive to interest rates. However, if you're looking for an instrument that pays consistent, stable dividends, a high-quality REIT is the way to go.